Yeah, I'm losing my edge.
Pete, today we're talking about ideas on uninspiring stock markets. I don't know about you, Pete, but I haven't been inspired by the stock market in a while. You look for people look for all types of things to inspire ideas in trading different asset classes. Metals, for example, recently you see all-time highs in gold, and that inspires a lot of ideas for people. But Pete, when you got a stock market that looks like this, no shade thrown to the way that the product was created, but a stock market that's flatlined over the last month, pretty much all month of July. It's hard to come up with an idea. It's hard to find inspiration from this action here.
Agreed. Good bounce. And we actually had that leg in June that looked like, boy, okay, we're going to get some. And what's interesting is, and we know this just by the nature of construction, there's lots of different equity indexes out there. A smaller concentric world within there are the ones that have tradable derivatives based on them. Even within that of recently, when we talk about change of leadership, it's not like 0.2%. It can be 2%, 2.5%. And we're seeing that traditionally, historically, you go back to the small 75, it has a beta of 1.2 to the S&P. And what that means, guys, for those of you new to that concept, is that on average, it moves 1.2 times the range of the S&P 500. That's what you want, is kind of a cool vehicle that has a little bit more elasticity to it, a little bit more volatility. Sometimes you lose that beta in the short term just because you're right. You have to construct an index out of something. You can't just say, well, today I want it to be Nasdaq because that's relevant. Tomorrow I want it to be Russell. You pick a side, like, in the Great War of Beverlovia independence back
Not
in
a thing.
1980s. You had to pick a side.
1980s. Oh my gosh.
You had to pick. But so this particular index is as you said, is the kind of inside performer here. I think that's very interesting.
A lot of things are performing inside, though.
Yes.
It's NASDAQ is really the only thing that is moving outside out of all of the major stock indices. You see S&P 500, a similarly boring July. But to your point, though, Pete, the differences in the way that these indices are constructed creates something that has been as often as just today. Earlier today, we saw a change in leadership again, where the NASDAQ last night started to sell off, and it looked like the small stock 75 was going to make up some ground on those tech stocks in the NASDAQ. And now NASDAQ is actually outperforming all of these other indices again. And so though, you look at this and you're like, all right, I don't know whether to buy or sell it. The last time there was inspiration was early June here. When you look at something like this, a little bit more intriguing, and I want to kind of tap into why this is happening. These differences, those divergences, come from unique holdings and unique weighting methods. And the small stock 75, we'll get to that weighting method in a second, but these stocks here really dragging it lower. These airline stocks, PAA, I believe, is an energy stock, Lyft coming out of nowhere, underperforming a lot of the other stocks in the whole equity market here. And this is why you have some divergences like this, because these four stocks here, Pete, though AAL and UAL, big stocks, big companies that have been around for decades, they're not in that NASDAQ. So it's almost like the small stock 75 is doing sprints with one of those parachutes strapped to the back of it. And this NASDAQ is just running all on its own without anything kind of dragging it down like these stocks. And then Pete, maybe you want to speak a little bit to the weighting method, the fact that all the stocks in the small stock 75 are relatively equally weighted. Of course, through performance after the index, it changes a little bit, but 15 stocks in each of these sectors with relatively equal weightings in the individual stocks and from sector to sector.
Right. And you know what, in depending on the environment, you just highlighted the push and pull of a interesting technology sector in here, financial sector to the same extent, but the energy piece with the industrials and airlines included in it, pulling down on this. So a net kind of canceling out. Rarely do we see the bifurcation or the underperformance and overperformance that we do. So a diversified index that will give you traditional, well-constructed performance is, by its nature at this moment. And remember, guys, we've got 32 trading days under our belt. Yeah. You can't say that, wow, for the first 15, this thing really had legs and now it's broken. It's not broken. It is what it is. It is something that we believe as markets move, there is going to be a greater propensity for opportunity in this index than a lot of the others. So we can't just say it's no good because we've had 12 inside days in a product with a life cycle of 40, given these very odd set of circumstances.
Sure.
So diversification here, what we try to avoid is, and this will come back to bite NASDAQ at some point, is this centering, this towering of fewer names accounting for more and more of the index. At that point, what do you have? Well, you've got 3 names. So and the randomness that comes with the performance of those 3 names and the whim of the market as how they do that. I would prefer to have something that gives me a little bit more balance and a holistic exposure that in the long run is going to give me a little bit more representative of the market in general and with a little bit more elasticity to it. So that is the thinking behind not creating an index that by its nature, I've got to believe that if you went back to the NASDAQ and asked them, hey guys, let's just have a bubble of trust moment. Would you be happy with the fact that 40% of your index is comprised of 5 underlines? Nobody in that room would say yes.
because this is
right. Go ahead.
Well, this is just a very weird time. Like you hear about sector rotation and other buzzwords that just at the end of the day mean some stocks are doing well and some stocks aren't doing so well. That happens all the time, but rarely do you see, and this is just a function of the coronavirus and the shakeup. It's almost like sector rotation on steroids, whereby those 4 or 5 stocks that make up, like you said, Pete, almost 50% of the Nasdaq index are outperforming huge. A lot of the stocks in the other ends of the stock market, you see divergences between energy and technology every single year, every single trading day, but rarely do you see a divergence of 30, 40, 50% like we're seeing currently. And to your point, Pete, that dependence on those 4 stocks will, and it's not like an us versus them thing, that dependence on those 4 stocks will turn at some point. Though it's been the case this year, Amazon, Apple, Microsoft, and Google, it's not sustainable that they tack on another 50% every single year for the rest of eternity. At some point, that dependence will stay with NASDAQ, that 40% in those 4 stocks will stay there. But at some point, sentiment will turn in technology and it won't turn in energy. Right. And you'll see that start to collapse. And so that is where I'm seeing opportunity, not in the mere buy or sell of small stock 75 or even NASDAQ, but in the trade-off there, the fact that this price here in small stock 75 being close to all-time low value relative to NASDAQ, I think that has to turn at some point. And so what do you get, Pete, when you buy 4 small stock 75 and you sell 1 micro NASDAQ? You're getting basically this diversified index in the small stock 75, accounting for the 5 major sectors and equal weights in 15 major stocks in those major sectors against a lot of technology stocks that have really seen what I think is unsustainable movement. So in buying this price, you are getting that long diversified index against a short, very focused index in technology. And this is a trade I don't mind. It's a 4-to-1 ratio. Actually, earlier today, you and I looked at a short call spread in /NQ options. Honestly, if you wanted to tack that on to just 1 or 2 small stock 75, you get this trade done that way, but I think it's an interesting thing to look at that we've looked at a few times. And so let's
And
move
you're
on.
right, Frank, you're absolutely right. We've done this trade, and we can certainly reload on this trade. We added a small Nasdaq call spread. I don't see anything wrong in adding a little bit more here. And I agree with you right now. Part of me thinks I think we're being a little bit defensive by saying I'm going to underhedge that. Respect the extreme. It's a better extreme within the symbiotic world of equity indexes than just saying Nasdaq's really expensive. So I would probably look at doing this 3-to-1.
Yeah. No, I would agree with you there. And this is, something that we've gone back and forth on. And you can see actually in this chart, you see in July, a movement to that extreme, a bounce back, a movement to that extreme, a bounce back. And this actually isn't accounting for today, small stock 75 giving back a big chunk. So this chart would actually be more back to down here. And you're seeing that two-sidedness, Pete, relative to this here. No two-sidedness in broad equity markets, not just the small stock 75, but you look at this S&P, you look at this Dow, especially here, this orange line, just zero movement. At least in this, you are getting that movement. And we've traded this a couple of times, and I like getting back into it. Something, a little bit of a different trade. The S&P 500 is basically, to me, Pete, a slightly more diversified version of Nasdaq. And this might be funny to some people who are new to trading all these different indices against each other. You'd say, oh, well, Nasdaq's 100 stocks, S&P's 500 stocks. You only have 75 with a small stock 75. How is it more diversified than these other indices? And it's more diversified in the sense that Nasdaq is 40% in those top 4 stocks, and S&P 500 is like 20 to 25% in those top 4 stocks. So that's what we're talking about. You could put 2,000 stocks in an index, but when it's so top heavy, that's where the lack of diversification comes. So this S&P is just like, as you can see here in the chart, a slightly less tech heavy index that has created for less of an extreme, but something that is similarly showing back and forth. If there was a day this week or next or the week after where for some reason S&Ps are really outperforming small stock 75 or vice versa, I wouldn't mind getting on either side of that trade.
Sure.
Also here with this Dow trade, this is interesting to me that Dow has actually
what a different look. Is that very rarely do we get to go through the world of equity indexes and see such disparate performance between the pairs. Not only this really reinforces, we talk about the lack of performance and outperformance. The looking at the relationships in this very efficient manner really speaks to that.
Yeah, you've got the Dow Jones here, only 30 stocks, but covering all sectors, and it weights on price. So a little bit of a different take. All the 30 stocks in the Dow are in the S&P 500, but it weights them based on price. So Apple, not necessarily the biggest weighting in this index, whereas it is in NASDAQ and S&Ps. But yeah, it's interesting that you look at small stock 75 against NASDAQ, low downside extreme here, against the Dow, upside extreme. And so, yeah, if you're looking for some long Dow exposure, the small stock 75, not a bad short trade against it, but also similar to the S&P 500 here. And as we finish up with the Russell, which is a small and mid cap stock index that has, I think, 2,000.
What say you on this?
2K. I mean, NASDAQ to me is the most interesting trade against the small stock 75. But
if you're looking for the extreme, absolutely.
These three, Pete, are great candidates for if you're seeing intraday or a couple of days of trending
you're
of
absolutely
Russell or Dow or any of these against SM75. I think you can play both sides of that. With NASDAQ, it seems like to me there's only really one side. I don't know how you necessarily buy an Amazon that's up 30% in this year and up even more than that in the last few months, bouncing off of those lows of mid-March. I think that what we painted there with the long, a few small stock 75 and short call spread or short a micro NASDAQ is an interesting trade.
And, you know, Frankie, we often talk about, and you're spot on with this, we talk about sector rotation. Oh, there's sector when you think about it, we say that, and it's like, well, what does that mean to me? How does that put $1 in my pocket? It's the most ambiguous thing in the world. How can I act on it? Here, you've just gone through 4 very distinct relationships that are visualizations and opportunity around that generic term of sector rotation that you can put into practice.